Hey everyone, it's Lisa Fox, realtor in Miami, Florida with Coldwell Banker Realty. And today I'm going to talk about the market, what's been happening, what are we projecting for 2023 in terms of home prices and interest rates, looking at Miami, looking around the nation as well. So if you're interested in that, then follow along with me. So first here, let's talk about the demand for real estate. Now, it's no surprise that Florida has been a hot spot in terms of people moving to our state. During COVID, a lot of people migrated, and people think because of COVID, everybody's moving to Florida or Texas or in Arizona as well. So actually, this came out in the middle of July 2021 that for the 5th consecutive year in a row, Florida ranked #1 in terms of the net migration of people moving in. Now, in other words, even before COVID, people were moving to Florida. Why? Because Florida has no state income tax. We have warm weather. A lot of retirees move here. A lot of corporations move here for tax reasons as well. So it's a great place to be. Where do people come from? These are the states that have had the most loss in migration. California had the most loss. New York, Illinois, and Georgia in the last 5 years. Another thing that we track when we look at migration of people moving to Florida is driver's license swaps. And this is something that really went up during COVID. You could see here in this blog post from the Next Miami, in the first 4 months of 2022, almost 62,000 people swapped their driver's licenses from New York to Florida licenses. And that was a 55% increase over 2019 numbers. So we had definitely a huge influx of people during COVID, people wanting to get out of New York City and also the Northeast in general. And Florida was definitely one of the hot spots. So that definitely affected the supply of real estate in our market, which really affects home prices. This chart I'm showing you now is from the trend graphic reports I subscribe to, looking at Miami-Dade County single family homes only. You could see the light green bars represent the available homes for sale. The dark green bars, those are sold homes, and the red line represents pending contracts or homes going under contract. So as you can see, I've talked about this before. April 2020, you see a lot of homes came off the market. People took their home off the market. At the same time, we had this surge of home sales, the red line. So that's created even lower inventory. You could see back in early 2022 here, January 2022, we had only 2,000 single family homes available. That's a very low number, very low level. You could see the pending sales were almost 1,500, almost as much as the amount of sales in all of Miami-Dade County. So this is why prices went up substantially in the last few years. Now, the Fed has been trying to curb inflation, so they've raised interest rates significantly. And you'll see here there's a drop-off of sales and inventory now. The amount of single-family homes available has gone over 4,000 units. But this is still an extremely low number. I'm going to show you in another chart as well, but before COVID, we were running around 6,400 single family home units on the market, now being just over 4,000. Back then it was kind of a neutral to buyers market before COVID. But if we look at this chart, many people ask, oh, does that mean prices are going to crash? If we go back 15 years back to when we had the financial and housing crisis back in 2007, 2008, we had over 16,000 single family homes for sale in Miami-Dade County, which is, so if you figure where we are today, we have only 25% of the inventory that we had back then. So that's why we are nowhere near having any type of crash in prices in the market, because we just don't have the inventory. In fact, there are homes still having multiple offers when they put it on the market, depending on your home, how nice it is and what condition it is and how it's priced and the location. People are still receiving multiple offers. Now, not to the degree that we had during the pandemic, because we don't have as many, we don't have like the volume of people moving here as we had in the past 2 years. So it's settling down. Of course, that can't go on forever. So it's good that that's calming down a bit to more of a normal level. And in my opinion, I mean, I'm going to put my guess that this amount of inventory is going to eventually go back up to where we were prior to the pandemic in this 6,000 single family home unit range. But at the same time, we have a lot more people in Miami than we did back then, but there was so much activity in the last few years that I expect that, our inventory is still going to come up a bit. But I want to say that there are still a lot of people sitting on the sidelines that want to buy a home who have been renting, or people who, we need more inventory still, so buyers have more to choose from. So that's what's happening. In spite of the higher mortgage rates, buyers are going to have more to choose from and hopefully be able to negotiate a little bit on home prices that are overpriced. So here's a look at mortgage rates over the last year. See, in January, we started off about 3.25%, which is really, interest rates in the last few years have been extremely low, even below 3% in 2021. So definitely there was a lot of people refinancing, and a lot of people are probably wanting to stay put, because if you refinanced your house and you're paying only a 2.5% or 3% interest rate, then a lot of people want to stay where they are and not move. So that's another reason why we might not see inventory rise as fast as we could. But so now interest rates are around 6.5% to 6 and 3. It really depends on your credit score and your debt to income ratio, what rate you will have personally. But this is just an average current trend of mortgage rates. At one point, they went up to 7 or over 7%, and now they've calmed down a bit. So here are 6 different entities that forecast for 2023. National Association of Realtors, they project a 1.2% price increase in the next year. We're talking about the whole nation, all homes, all price ranges lumped together. So really, we're looking at, most people are projecting a flattening of home prices, whereas in Miami in the past, our average price per square foot has doubled in the last 2 to 3 years. So for us to have even minus 5% decline in home prices in the next year, that's really minimal compared to where we were. But it does mean that we would have to have more inventory come on the market, and less buyers than we've had, and more for buyers to be able to negotiate down in order to make this happen, because we would have to become more of a buyer's market so that buyers can negotiate a lower price in order to have lower closing prices. I want to show you also, so this is what they're projecting for 2023 and 2024, home prices to fall and then recover. So they're looking at, so far what they're projecting is we might have a flat or lowering year in 2023, but then in 2024, they expect us to be on the increasing side of things again. So I hope this information has been helpful. On my next video, I'm going to have individual market updates for sub-markets within the county, such as Brickell, Coral Gables, Pinecrest, Coconut Grove. So stay tuned for that. And also follow me on Instagram, Lisa_Fox_realtor. Go to my website, lisafox.com. I have also Facebook and TikTok. So I'll see you on the next video. Take care, everybody. Bye now.